Hello, everyone. Thank you for joining me today. I'm Haydon from Good Green Money. We are ethical IFAs based in the UK. I'm very pleased to tell you that today I'm joined by Peter Michaelis. He's the head of sustainable investment at Liontrust Asset Management. How are you, Peter?
Very good. Thanks, Haydon. Great to be here. Thank you.
No, it's good. I'm very grateful for you to coming for joining the conversation. Now we'll get cracking in a minute, and you can tell me lots of interesting stuff. But before we do that, I'll just set the scene, tell the viewers a little bit about Liontrust. So Liontrust started life in 1995. We've now grown to be one of the leading sustainable investment companies in the UK. And at Good Green Money, when we invest clients, we like to handpick which are the best ethical investments out there. And we're very pleased to say that Liontrust fit the bill. I'll just tell you a couple of facts about them before I hand over to Peter. Based in London, they look after over £30 billion worth of investments, of which about a third, 10 to 11 billion, is just in sustainable investments, which is really great that they're helping fighting the good fight as we are at Good Green Money. A couple of other facts. They work by a number of strategic objectives. And I just say this because their number one objective is to act as responsible investments. So they've got it there in black and white. That's how they go about their business, which is great. They won heaps and heaps of awards. And another thing I really like about Liontrust is they're very transparent about their information. And I'll give you a really key example is when they put funds together. Let's say you're invested in 50 or 60 stocks. They publish the whole list for you to just go and see, so you can scrutinize it yourself. Not all fund houses do that, even the reported ethical ones. Some only list their top 10. So the fact they're all there, nothing to hide, is great to see. But there you go. I've been rambling on a bit, Peter. You've been with Liontrust a long time. Tell me, have I got my facts about right? What more can you tell me about Liontrust?
Okay, well, I'll just give a little bit of history of the team, because the Sustainable Future team, so the Sustainable Future funds, were actually set up in 2001 at a company called Morley, which then became Aviva Investors. And they were set up by my boss at the time, Claire Brooke. And the whole purpose of the Sustainable Future funds, which back in 2001 was pretty radical, was to deliver superior returns by investing in sustainable companies. At the time, the widespread belief was that if you invested in companies which were doing good, you were likely to underperform, or there was some kind of give up. It was not certainly it was not a widely held belief that you could deliver strong returns by investing in sustainable companies. And so from the outset, that was what we aimed to achieve. So we set up the Sustainable Future range, and I think the fact is the range is an important aspect of what we do, so that there's something for every kind of investor's risk appetite in the Sustainable Future investment process. We set it up in 2001, and I think over the last 23 years we've done a pretty good job of proving that aim true, that we can deliver strong returns to our clients by investing in sustainable companies. Now we're working at Liontrust now, and we moved there in 2017, but we've kept the investment philosophy, the track record of the funds, our clients, and all of that has been continuous through the years. And I'm very keen to talk more about how we do the Sustainable Future approach, but that was just a potted history.
Oh, no, that is fantastic. You've added a lot more color there. You have touched upon the fact that you've got this Sustainable Future range, and it's, when I see a list of investments, they're easy to spot. And I know that if I see that in there, then it's something that, gives me a warm glow. I know you guys are doing a good thing. So let's just dwell upon the Sustainable Future range a little bit. So tell me a bit about the philosophy that you use. Is something you would have honed over the years. I know you have some fantastic investment mandates, many of which I've looked at over the years. What process do you go through? Tell me a bit about the day-to-day. What do you walk through to decide what gets into a portfolio, into a fund?
Okay. Yeah. So the starting point, and why we believe there is an alignment between sustainable businesses and generating good returns for clients, is that is that we look at our society and our economy, and we say, look, it's not static. There's progress. We work out as human beings in this market-based capitalist economy. We work out how to do things better. So we work out how to deliver the same outcome with fewer resources, so resource efficiency, energy efficiency. We work out how to deliver better quality of life, so innovation in healthcare, and we learn also how to be more resilient. For instance, you have the global financial crisis. You work out how to prevent that ever happening again. So there's progress, and within each of those, actually, the progress is, I think, a lot more dramatic than most people estimate. And one of the ones we talk about is child mortality. So at the turn of the 20th century, if you had a kid, more than one, it was 1 in 5, so this is in developed countries, 1 in 5 wouldn't make it to their 5th birthday. I mean, that's unthinkable for us today, where now the number is more like 1 in 300, 1 in 500. So enormous improvements in something that's so fundamental to human happiness and human development. And we see no reason to believe that those trends have stopped. We think that actually the businesses which are helping to make our world cleaner, healthier, and safer, they're providing the solutions to climate change, to health issues, to problems of sort of access to finance or digital security. Those companies will see strong growth because they're delivering something novel, a new solution. They'll tend to have less competition. And that's a pretty good recipe for finding growth companies that perhaps have been overlooked by other investors, or at least underestimated by other investors. And so that's really where we kind of kick off from. We also believe, sorry, I'll just add to it, we also believe that as investors in companies, you own shares in the business, and it's our duty, and it's also in our self-interest, to engage with management to get them to run the businesses in the best way possible. And so making sure they run the businesses in the interests of all stakeholders, the environment, employees, wider society, suppliers, customers, etc. And we think that makes for good long-term business strategy as well. So those are a few of the aspects of our process, and why the starting point for our investment is to find companies aligned with our 20 sustainable investment themes.
That's absolutely fabulous. Yeah. So I'll just quickly summarize some of the notes I've made there. So well-run businesses, often they are unique in what they do. You take into consideration the stakeholders that are a part of that. Certain sectors that you work in are to make life more healthy, safer, more resilient, resource efficiency, cleaner, digital security. I mean, these are all fantastic things, and absolutely type of stuff that's the typical client of Good Green Money is looking for. So thank you for that. That's really good. We'll move on. I'll tell you what, we'll add even more color to it now. If you can run through just a few case studies for me. I know that you've prepared some really good ones in advance, a good little mix of some example holdings within some of your funds. Can I pass things back to you and you tell me a little bit about some of those?
Yeah, with pleasure, because I think that's where it kind of really comes to life. The kind of first example comes from a theme around increasing electricity generation from renewable sources, and I guess it's no surprise to listeners that we're invested in that theme. But if you go back 20 years, it was largely ridiculed as an idea that wind or solar could ever compete with fossil fuels. If you look at what has happened in the last 10 years, solar, the amount of solar being produced annually or photovoltaics has gone up tenfold, 10 times. In the next 5 years, it's predicted it'll go up, it'll double again. And actually, predictions in this area have always been very wrong, have always undershot. So, we think that trend is not going away, and the reasons why are that you see the cost declines of wind and solar just continuing and continuing and continuing, and that as it scales up, so the cost comes down. It's a bit like Moore's law for semiconductor chips. Meanwhile, the insecurity of relying on fossil fuels has been demonstrated dramatically, out with anything to do with climate change, by the war in Ukraine and insecurity of supply coming from Russia, etc. So if you want, it's the energy trilemma of affordability, sort of low carbon, and also secure and available. Then the quickest way to put on new electricity generating capacity is wind and solar. Batteries are coming into it as well, and they're getting cheaper and cheaper. So that leads us to say, well, okay, where should we invest then? And that has led us to investing in Vestas. So we took a position last year in Vestas. It's outside of China. It's the largest wind turbine manufacturer in the world. It's Danish, actually. And why do we like it? Well, I mean, it is challenging running a business where the cost of what you're selling is falling all the time, because it starts to squeeze the margins of your business. So you need to have a lot of discipline in making sure that you're not depressing prices too much to win the business. And we think Vestas have now realized that they've got to be a bit more disciplined on price. And so we'll start to generate strong profits from the growth they're going to see in the years to come. Just to kind of give an idea of some of the impact that they're seeing, in the last 3 months, the company estimates they shipped wind turbines that will save 118 million tons of carbon dioxide. So, us in the UK, our individual footprint is about 8 tons per annum each. So it just kind of puts that in perspective that this is really significant in the drive to deliver a low carbon economy, but also to produce cheap electricity, and one which doesn't have geopolitical tensions and wars as a kind of offshoot. So Vestas is one of the stocks within our portfolios. Shall I go with another?
Yeah, please do. No, that was very insightful. As many as you wish.
And by the way, these are obviously not recommendations to buy any of these.
No. Don't worry. I'll caveat that at the end.
You've got lots of disclaimers in there. I mean,
yeah.
I guess so. Vestas, renewable energy is a reasonably obvious one for sustainable investment funds to invest in, but sustainability is about more than just climate change. You could solve climate change by crashing the economy, or you could, the whole point is to generate. The whole point of a sustainable economy is to generate, good quality of life for members of that economy without trashing the planet. And so we look for themes around improving quality of life. And one of those themes is connecting people. So the idea that actually, the more we can kind of interact with each other, the better it is. If you're generating a business or social interactions, etc., that improves quality of life. And generally, as long as we haven't got our heads just stuck playing Candy Crush on our phones. But the company we invest behind, which does this, and I think is a great example of this, is a company called Helios Towers. Helios Towers does mobile phone masts. It owns and operates them, and the idea is that rather than every mobile phone operator having their own network of masts, you have a single owner, and 2 or 3 or 4 operators go on the same mast. So it's massive improvement in resource efficiency. Helios operate in sub-Saharan Africa, predominantly, and also Oman. They have about 14,000 of these towers, which are going to expand to about 20,000 over the next couple of years. And they cover 140 million people, which is likely to go up another 100 million over the coming years. And I guess what's kind of impactful about Helios is the fact that these towers are in areas where there's no landline option. This is critical. If you need medical assistance, or if you've got a business, or having access to communications is a major improver in your livelihood and quality of life. And so we think it's both got strong growth prospects and it's got very strong positive social impacts. So that fits under that theme of connecting people.
Fantastic. Yeah, I always like to talk about an example that's good for the planet, which we've done, and one for people, which very much that is. Connectivity is key. I tell you, maybe perhaps if we just run through one more example, I think Oxford Instruments is particularly interesting. I don't know if you want to tell me a bit more about Oxford Instruments, perhaps.
Yeah, and one thing I haven't mentioned is that we invest with a long-term time frame. Like a minimum of 5 years we're thinking of. So we're not looking for stocks that are going to, we're not going to looking to trade in and out of stocks. So one of our, the key attributes we believe we have is patience, allowing these companies time to demonstrate the success of their business strategy. And sometimes that can be quite challenging. So in the example of Helios, it hasn't actually delivered strong returns yet. We think it will. Oxford Instruments, on the other hand, has performed well as a stock. What Oxford Instruments does is, I have a background in physics, so I have to confess to being slightly seduced by their kind of equipment, which is stuff like spectroscopy and electron microscopes and chromatograms and things involved in quantum computing. But essentially, the mainstay of what they do is they analyze, or the equipment helps to analyze, what's in our water, what's in materials, so advanced materials, what's in food, drugs, and it's quality control, and it's sort of understanding materials and bioscience in much greater depth than we ever have before. And what they've managed to do is really to turn the company around from one that just produced really interesting bits of kit to one which has become really commercially successful as well, by working more intimately with their clients and saying, you like this analyzer, how can we make it better for you? How can we service you better? And by using that feedback, they've really turned themselves into one of the world's leading providers of these instruments. So it's a really nice example, we think, of a company that's benefiting from that whole theme of better monitoring and quality control. And that's kind of another example of the type of companies that we look to invest behind.
Oh, that's fantastic. So there's three quite diverse but very interesting businesses. I think a lot of people would have heard of Vestas, but perhaps not the other two. So it's really good. I think it's been a really good conversation today. I'll probably start wrapping things up quite soon. But before I do you think there's anything else you want to add that we might not have covered?
Well, I think the thing I mentioned at the outset, which is around engaging with businesses. So we own what we believe are the good businesses, the ones with good management, but they can always be influenced to sort of improve what they do, maybe disclosing more on their carbon emissions, or and so that's a really important part of the process that the Sustainable Future funds go through. So for instance, before the COP meeting in Glasgow, we engaged with the main carbon emitters within our portfolio to say, okay, how are you going to decarbonize? How are you going to hit net zero? What is your trajectory? And pushing on them to do more. And we had, we think, quite a lot of success in companies then say, actually, we've got to up our game here. Other aspects within our corporate bond funds, we do invest in some of the UK water companies. So it's, digging into the problem of river pollution and working on how they can demonstrate that their capital investment plans are going to deal with that problem. And that's, that's something which we have great pride in doing over the years. And it's not something you fix in one meeting. It's something that's pretty protracted. You have to keep at them over many years. But it's certainly something that's very important. And we report back to our clients clearly on the investment returns they make, but we also report on the positive impact generated by their companies and the success or otherwise of our engagement with businesses too.
No, that's great. Yeah, engagement is a key part of it in ethically investing ethically. And with the size of your business now, you've got some clout there. Let me just come back with a question on that. Do you have occasionally find that somebody's off the rails a bit and you say, look, you've got to improve in this way, you put it to them, and do you see examples when they markedly do improve, or do you see other examples where they don't and then you disinvest? I mean, have you experienced that over the years?
Yeah, definitely both. One example just on the decarbonisation side of things was a paper and packaging company we hold called Smurfit Kappa that do cardboard packaging, which replaces plastic, which has positive environmental impact. But their carbon reduction plan was based on improving the carbon intensity, so improving the carbon emissions per unit of sales. And we said, well, look, if you're going to continue to grow as a business, your carbon emissions are going to keep going up. What you have to do is you've got to turn that around to actually being an absolute reduction in carbon emissions. And they were very constructive with that and have actually sort of embraced that. And I think it's been very positive for the company. There are other companies where we just don't get a reaction, and that does lead to us saying we're either going to hold a lot less of that business within our portfolios or we'll divest from it entirely.
Oh, that's a good example, Smurfit Kappa. I know also with Grenfell, what's the company that's
Kingspan?
Kingspan, yeah, I couldn't think of the name for it. I mean, they were always a darling in the investment world until the Grenfell occurred, of course. And but as I understand it, they've improved their ways since, and they're becoming a viable investment once more. I mean, that's quite an interesting case study, isn't it?
It's a really interesting case study, and it is complex. Now, the way I'll tell the story briefly and then explain why we now hold Kingspan within the portfolios. But Kingspan, through the Grenfell inquiry, it was highlighted that they had some serious governance failings in the way that they marketed and did the fire certification on their insulation board, 5% of which went into the Grenfell Tower. And within the inquiry, just to point out, the insulation was not the cause of the fire or the spread of the fire. That was on the kind of cladding, but nevertheless, it was a serious failing. What we did with the company was to work with them, and we've, ever since the fire, since 2017, we've been engaging on this issue, as to say, what are you doing to ensure that this can never happen again? What governance systems are you putting in place? What certification systems? And the company have done an immense amount. They really have. And we held the company until December 2021. And we sold the business based on valuation primarily. We felt that the shares had gone up to such an extent that we couldn't see much upside. And we still had a few niggles over their governance we felt they hadn't really satisfied us entirely on. 18 months later, we have done a site visit. We've gone to see their fire certification, their research department, how seriously they take this issue, and we're comfortable that they're dealing with this issue very in a real in a watertight fashion. In addition to that, the shares have fallen dramatically and offer an opportunity. And then that comes to why would we be interested in it in any case? And it's precisely because of climate change, and buildings account for 30% of carbon emissions, where the way we light, we heat, and other energy use within our buildings. And Kingspan have a product which is far and above the others, the competition, in terms of delivering energy efficiency improvements. And so it is a solution provider, and we believe it's well placed to deliver from those sustainable investment themes. And it's about working with companies. It's about realizing no company is perfect and making sure that they learn from things that haven't gone right, and put in place systems to make sure they do in the future.
I think of all the examples, that's possibly the most useful to learn about. It just shows that this is not an easy thing to do, and you have to be very conscientious and keep at it to do this stuff properly. It's also an interesting observation that in terms of ESG, the E was always there, but then the G fallen away. Poor governance, and you've come back and addressed that, and you've got faith in them. You wouldn't have done that lightly. And the fact that you're there doing that is great news. You're working on behalf of the clients that invest with you to do that. So that's really useful. Thank you for running through that example in a bit more detail for me. Okay, I think we'll wrap things up now, if that's okay with you. Just before I go, just as we touched upon earlier, if you're watching this, this is not advice, this is information. Your own specific circumstances will dictate how best you should be invested, and you shouldn't really do it yourself. You should go and see a professional advisor. So you may end up in Liontrust funds, but go and see an advisor first. And then the other thing to note is these videos are all on YouTube. If you do wish to be notified when future ones become available, then do subscribe, and you'll get that notification. So anyway, once again, Peter, thank you very much for today, and it's been great to talk to you. And yeah, I hope to see you again.
A real pleasure. Thanks, Haydon. Thanks, everyone.
See you later.